Oh, hello there, everyone. Welcome back to the Schaefer Stock Market Podcast. I hope you are doing great. My name is Josh Selway. I'm an editor at Schaefer's Investment Research, and this week on the Schaefer Stock Market Podcast, we're going to talk about a little company named Digimarc, ticker DMRC. Popped up on my radar this week, digged into the company a little bit, and it was quite fascinating. So we're going to talk about them a little bit. They called themselves the barcode of everything. But before we get into that, plus a few other things I want to talk about, we're going to do a brief look at the broader market. And let's start with this week's Fed decision. They kept rates steady as was expected, and they also signaled that they're going to be patient going forward with interest rates, and that apparently also means probably not cutting interest rates, which is what the White House continues to call for. Today, Vice President Mike Pence was saying that the Fed should look at cutting interest rates since inflation is so low. So that will be something to watch going forward, as we've already seen that play out, this dynamic between the White House and the Fed since Trump was elected. Other than that, the tech sector has been strong this week, and particularly Amazon today, and that is thanks to news that Warren Buffett's Berkshire Hathaway is buying shares, or has been buying shares of Amazon. Obviously, Warren Buffett has always been a fan of Jeff Bezos, the Amazon CEO, but he said as one of his other fund managers that was buying the shares of Amazon, not him. So we'll see if he does the same thing he did with Apple, where one of his guys started buying Apple. He looked at Apple and began buying the shares himself, but I'm sure he's looked at Amazon enough. It's not really his type of company, as he's talked about many times with technology, and he's not too familiar with a lot of that stuff. Apparently one of his managers, we'll have to see when the filing comes out later this month how much they bought. But other than that, the Dow is actually set for a second straight weekly loss, and that was even with Apple's impressive earnings released this week. And the other indexes, the S&P 500 and the NASDAQ, also set for weekly losses as well. And the other big story I should mention as well, of course, is this jobs report we just got this morning from the Labor Department, which showed another strong month of hiring and increase in non-farm payrolls, as well as the lowest unemployment rate since 1969, fell all the way down to 3.7%. There had been a lot of talk coming into 2019 and then throughout the early months of this year about a potential recession. We're approaching the longest economic expansion in the history of the United States. There were a lot of fears about a recession, but yet that has not come up in the numbers. The hiring has stayed hot, so we'll have to see how long this expansion continues. It's certainly something to behold. And I always think back to the stat I saw, can't remember who tweeted it out, but I believe there has been a recession every decade going back to like 1900 or 1890 or something like that. I'll have to look into that. So this would be the first decade in many years without a recession. So that's something to keep in mind. And we just had Warren Buffett today, speaking of him, talking about how unusual the economy is right now with low interest rates, everything that's happened with the Fed, low inflation, this very long, steady expansion in the U.S. economy. All these things are quite unusual. As he said, no textbook has ever talked about this type of situations. We are in unprecedented times as far as monetary and potentially even fiscal policy. And speaking of fiscal policy, I should also say that there has been recently this week, we had some reports about a potential infrastructure bill that could come up in Congress. You had congressional leaders meeting with the president, and that could be something they agree on. But other people, aides and other people close to these people that were in the meeting talking about infrastructure, say it may be unlikely that they agree on how to pay for this. So something else to watch for. Let's turn to Digimarc. So Digimarc popped up this week because it announced this partnership with Walmart. They're working with Walmart to reduce fresh food waste, improve markdowns, and to give Walmart advanced labeling. So this is a good example of what Digimarc does. They actually work in a few different industries, and in the retail space, they help companies do a lot of things more efficiently. To give you a simple idea of Digimarc's business and their technology, essentially what they can do is make a product's entire label the barcode. So instead of just having to scan this little barcode to identify an item, you can just scan it anywhere, and it's much quicker and easier. So they have a video online, if you want to look it up, where someone is scanning all these items, like in a checkout lane, and they're scanning it with traditional barcodes, and it takes them 25 seconds. And with Digimarc's technology, they scan the same items and they cut 10 seconds off that to get it down to 15 seconds. So that example, doesn't sound too crazy, or, that's not going to really get anyone's attention. But when you consider that over a bigger scale, how much that could eliminate and make things more efficient, that's really something that's going to be a game changer. And especially now with Walmart, that's an interesting company that for them to be working with, because Walmart just announced this year that they're going to be using a lot more robots in their stores. And we've seen videos on social media of these inventory robots, these robots that go around the shelves. And I would guess that they also have them in the back of the stores as well, that go up and down the rows of items and they can check the inventory instead of someone having to go around with the scanner and doing it themselves. So I would imagine that Digimarc's technology is going to be the perfect fit for this, as retailers look to improve in all aspects of their business. And obviously inventory is a huge part of that. So this could be a big area for Digimarc, and there could be a lot of upside here for a company like Digimarc. And what's really interesting about Digimarc is that they work in a few different industries. So outside of retail, they also work in branding to help companies with their branding and labels, and with their smart label technology. And what they can help companies do is that they also have software that goes along with this technology, and essentially consumers are able to use their smartphones to scan an item and to get more information on that item. So you can imagine how useful that will be for consumers once that technology really goes mainstream. If you're shopping, you want to find out whatever it is that you're looking for, just scan it with your phone, and that'll bring up more information about that. So on top of branding and helping companies with their branding and labeling, they also work in book publishing, which is extremely interesting. They help provide solutions for piracy deterrence. So that was kind of fascinating. I wasn't expecting them to work in that industry. They are somewhat diverse in their offerings for how they can help various companies. Looking at some other companies that Digimarc has worked with or is working with, last year Microsoft added the Digimarc barcode detection to its Windows platform. This is according to a timeline on the company's website. And then back in 2016, the company also partnered with retail scanner vendors such as Zebra and Honeywell and NCR. Zebra Technology is a company that I talked about on a previous podcast. It's quite interesting for today's retail setup and for what companies need logistics-wise. Zebra offers a lot of interesting solutions on that front. So I was fascinated by the fact that Digimarc is working with Zebra. So as for the stock itself, it had been bouncing around in previous years, not going too far in either direction, and then right before 2019, at the end of 2018, it fell all the way down to around $14 per share, and since then it's been pushing higher. This Walmart news had it surging this week, and it's all the way up to around $50 per share or so. It hit an all-time high of $50.80 per share, and this puts Digimarc's market cap right around $600 million. So it's still a small cap stock, and that $600 million market cap comes on about just over $5 million in sales in the company's last quarter. So we'll keep an eye on Digimarc, watch those sales, see if the company can continue to expand, work with bigger retailers, as the industry more and more relies on technology to do all types of things and to speed up many processes, to help with logistics, to help with inventory, and all these different things. Digimarc is certainly a company to watch on that front. Hit on IPOs just for a minute or two last week, so we'll go into a little more detail here. We had some analyst notes come out on Uber. Uber is set to go public on May 10th, and we already have analysts initiating coverage on the stock, which will be ticker Uber, UBER. So we had Wedbush come in with a bullish rating. They set an outperform rating and a $65 price target. They're saying that the ride-sharing industry has become one of the most transformational growth sectors of global consumer market over the past 5 years, and that Uber is the clear number one leader in that sector. D.A. Davidson initiated Uber with a more conservative neutral rating, pointing out the company's timeline to profitability is quite questionable, and that seems like an understatement to me. If you've seen Uber's numbers, they are losing tons and tons of money each quarter, and they even put in a warning when they filed for its IPO that the company may never become profitable. So again, living in unusual times. That's reminiscent of the 2000s with these tech companies that, people see the future, they imagine what the future could look like, but the numbers have to be there. So Uber's path to profitability is quite questionable, and that's what D.A. Davidson's worried about. And while we have analysts weighing in on Uber, they are also changing their opinions on Lyft, the Uber rival. Lyft obviously just went public itself, and it's scheduled to report earnings next week after the close on Tuesday, May 7th. That'll obviously be its first earnings release as a public company. Lyft stock has been struggling. At last check, it was around $60 per share, and analysts have been weighing in quite bearishly. We had Atlantic Equities initiate coverage with an underweight rating and a price target all the way down at $50. Not quite 15, but $50, still far below even where Lyft is trading right now, around $60 per share. Basically, the analyst was worried about the competition between Uber and Lyft, and just suggesting that it's going to be so fierce that it's going to be hard for either one of them to really outperform the other and get ahead. And while we are on the IPO topic, let's bring up three more names here. Beyond Meat, ticker BYND, which is a vegan burger specialist. And Beyond Meat had its public offering this week, and the stock more than doubled during the day. It was trading up like 170% at one point, got halted for volatility. So obviously it got a lot of attention, trading in the $60 range. So Beyond Meat will definitely be a name to watch, as obviously vegan diets have been gaining in popularity. People are paying a lot more attention to what they eat these days. So Beyond Meat, ticker BYND. Another one is medical device maker Transmedics Group, ticker TMDX. They went public this week as well. And then a really interesting one was this Chinese company, So Young International, ticker SY, which is an online marketplace for aesthetics surgeries, so plastic surgeries and other types of surgeries, that you can find those services on So Young International. Again, ticker SY. I wanted to touch on a couple other things here before I go. And first is three names that have seen unusual options trading this week. We highlighted these names in our free midday market check newsletter, so you can check that out if you want. It comes out around lunchtime every single day. And one name that we mentioned this week was education stock Chegg, ticker CHGG. Chegg this week actually sold off after earnings, but the shares have been trying to work their way back up in the following days. With the stock trading just around $38 or so, there was bullish options trading where traders were buying to open the 60 strike calls in the January 2020 series. So that would essentially be betting on Chegg to rally 60% by the time January 2020 rolls around. Another name that saw unusual call trading was Transocean, ticker RIG. Rig, that is the offshore oil driller. Trade Alert, where we get a lot of our options trading data, pointed to increased call activity on rig, and it said that this was part of an ongoing trend with stocks in that sector. As part of other drilling stocks, we're also seeing unusual call activity. So it seems like speculators were trying to bet on a spike in these stocks, and for rig, call activity was far more popular than normal. But unfortunately, this stock actually fell sharply this week. The company reported earnings. Wall Street ended up hammering the stock. It fell. It was last seen trading around $7.73 per share. And then another name that saw unusual options activity was Strategic Education, ticker STRA. This stock has been red hot this year. It just jumped to new highs, and options traders seem to be buying open the May 165 call. The shares were last seen trading around $158 each. Traders may be betting on more upside from this stock in the coming weeks. Again, Strategic Education, that stock is already up 39% in 2019. Folks, if you haven't already, I would highly recommend you check out Schaefer's on Twitter, on Facebook, on Instagram, wherever you want to follow for financial news and stock market updates. Of course, you can go straight to schaefersresearch.com. Sign up for any of our free newsletters. I would highly recommend the Monday Morning Outlook from our Senior VP of Research, Todd Salamone. But until next week's show comes around, you can go ahead and subscribe, review wherever you're listening. Any way you can support the show, I would appreciate it. And if you want to follow me on Twitter, my Twitter handle is Selway151. I don't get a chance to tweet very often, but I try to put some interesting things out there whenever I find them. So if you want to follow over on Twitter, that'll be cool as well. But I'm out of here. Thank you again for listening. See you guys soon.